If you've been keeping an eye on the housing market, you already know it's been an absolutely wild ride. But here's the thing, the old rules, they just don't apply anymore. The whole idea of a single U.S. housing market is, well, officially obsolete. We are in the middle of a huge fundamental shift, and by 2026, the map of real estate opportunity in America is going to look completely different. And I'm not talking about little tweaks here and there. I mean a total transformation in where, and maybe even more importantly, how we're all going to find our next home or our next big investment. The game has changed, and this right here is the new playbook. So let's dive in.
You know, this one sentence from the National Association of Realtors' latest forecast, this is the whole thing right here. It is the key that unlocks the entire next chapter of American real estate. Think about it. For years, buyers have been stuck in this impossible situation. On one hand, you had prices shooting through the roof. On the other, you had these punishingly high interest rates. It really felt like there was no way to win. You either couldn't afford the house or you couldn't afford the loan on the house. What this new report is telling us, and what we're about to break down, is that this pressure is finally starting to ease up. But, and this is crucial, it's not going to happen everywhere at the same time. It's going to pop up in these specific pockets around the country where two massive forces, falling interest rates, and a desperately needed bump in housing supply finally meet. And right there, at that intersection, that's where the opportunity is being reborn. Before we jump in, don't forget to like, share, and subscribe, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. Your support really does help us create more of these deep dives for you.
So that brings us right to the big question, doesn't it? This is probably the most important question for anyone even thinking about making a move in the next few years. It just doesn't make sense anymore to ask, so how's the U.S. housing market doing? The real question, the one that's going to define who wins and who loses in 2026, is where, specifically, are these forces of lower rates and more houses coming together to create these brand new zones of opportunity? That's the treasure map we're about to uncover together.
But okay, before we pull out the map, we have to talk about the weather. The Urban Land Institute has this great way of describing the current economy. They call it an economic fog. And it's the perfect description, right? It's this messy mix of inflation, all this geopolitical stuff going on, these huge shifts in how we work, and just a general sense of anxiety. We have to look through that fog to really understand the big picture forces that are either going to supercharge these trends or just stop them dead in their tracks. Getting this economic context right, it's everything.
Okay, so what's so fascinating here is that this slide basically captures the two competing philosophies that are guiding billions, if not trillions of investment dollars right now. On one side, you've got what they call the patchy fog camp. These are the optimists, right? They think the worst of the uncertainty is pretty much over. They're betting the Fed keeps cutting rates, which will pump up property values. They see more money flowing back into the system, making it easier to borrow. If you're a home buyer in this camp, you're thinking, okay, buy now before prices go up again, then just refinance when the rates drop. But then you have the heavy fog group. These folks are the pragmatists. They're getting ready for a world where interest rates stay stubbornly high for a lot longer. For them, the game isn't about hoping for a quick pop in value. It's all about income. It's about buying things that generate strong, predictable cash flow month after month. Your own strategy for 2026 really comes down to which one of these scenarios you believe in more.
And look at this. This chart shows you that this isn't just a theory. The big money has already laid its cards on the table. What you're looking at is a massive tectonic shift over the last decade in where institutional investment has gone. Just look at the bottom of the chart. Office space in central business districts, down over 15%. The pandemic didn't just empty out offices. For a lot of investors, it completely broke the business model. But now, look at the top. Warehouse and industrial space is up a staggering 20%. Life sciences, self-storage, single-family rentals, all of them are climbing. This right here is the physical proof of a new economy being built in real time. The smart money isn't betting on shiny downtown skyscrapers anymore. It's betting on the backbone of e-commerce, it's betting on infrastructure, and it's betting on the simple truth that people will always need a place to live and a place to store their stuff.
Okay, so we've cleared away some of that economic fog. Let's move from that 30,000-foot view of capital flows right down to the street level. Now that we get the why, the big economic forces and these massive investment shifts, we can finally get to the where. This is the part where we pinpoint the actual cities that the National Association of Realtors has flagged as the new, emerging opportunity markets for 2026.
So, what's the actual recipe for one of these hot new markets? Well, it's not just about finding cheap houses anymore. That's kind of the old way of thinking. The NAR has identified 10 key ingredients for a market that has real, sustainable growth potential. Think of it like this.
You need a solid base of millennial households. They're the biggest generation, and they are smack in the middle of their prime home buying years. Then you got to add a healthy dose of job growth because, a mortgage is pretty useless without a steady paycheck. You also need a constant flow of people moving in, not out. But here's the secret sauce, the ingredient that so many cities are missing. You need new houses being built that actually line up with what people in that area can afford. It's a much more sophisticated, data-driven way of finding real, lasting opportunity. And our first case study is the perfect example of this recipe in action: Charlotte, North Carolina. For years now, Charlotte has been a total magnet for growth, and all the data we're seeing suggests it's just primed to be a top performer in 2026, hitting all those key markers we just talked about. Let's put some hard numbers behind this beautiful picture. A median home price of $235,000, that is still well within reach for a huge number of Americans. A low unemployment rate, plus a projected 2.5% job growth, that signals a really strong, stable economy. But here's the key: it's the quality of those jobs. Charlotte is the second largest banking center in the entire country, right after New York City. It's a fintech powerhouse. It's got giants like Bank of America and Truist headquartered right there, and it's home to Duke Energy, a Fortune 500 company. These aren't just jobs, they are high-paying, stable careers that create this amazing virtuous cycle. They attract a highly educated workforce, which then attracts more companies, which creates more high-paying jobs, all of which supports a housing market that's thriving, but somehow still affordable. This quote from the NAIR report just absolutely nails it. It's that convergence of those three things that creates the magic. You've got the demand from a young, growing population that's hungry to buy their first home. You've got the powerful economic engine of a great job market fueling that demand. And, most critically, you have builders who are actually responding with more homes that those buyers can afford. That's the formula. It's the formula that tons of other cities are trying and frankly failing to copy.
All right, let's head up north for a minute and look at another market that made the list, but for a really interesting, different reason: Minneapolis-St. Paul. Now, it might not have that explosive Sunbelt growth story like Charlotte, but the Twin Cities have this unique set of strengths that make them incredibly well positioned for what's coming. It's really a story about stability, affordability, and just a ton of untapped potential.
So let's look at the data here. Minneapolis is described as one of the most rate-sensitive markets in the U.S. What does that actually mean for you? Well, it means there is a huge number of potential buyers, young families, first-timers, who are right on the edge of being able to qualify for a mortgage. They've done everything right, they've saved up, but these 7% interest rates have kept them on the sidelines. But when those rates drop just a little bit, say from 7% down to 6%, a massive wave of these new buyers can suddenly jump into the market. With over a third of households run by millennials, a stable job market, and a healthy 5.3% growth in new home permits, all the pieces are there. The second rates tick down, this market is poised to unleash a flood of pent-up demand. It's like a coiled spring, just waiting to be released.
We're about halfway through, so this is a great spot for a quick reminder. If you're getting some value out of this breakdown of the 2026 market, don't forget to like, share, and subscribe, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide.
All right, now we're going to make a really important pivot. We've covered the economic climate, the why. We've talked about the geographic hotspots, the where. But there is a massive technological disruption hurtling toward us that's going to change not just where we buy, but fundamentally how we buy. The map is being redrawn, yeah. But the tools we use to read that map, they're about to get infinitely more powerful. And I'm talking, of course, about AI.
I absolutely love this phrase from the Urban Land Institute report, playing SimCity for real. It's just a perfect way to capture the next step in how AI is going to affect our world. For the last year or so, we've all been obsessed with generative AI, tools that you give a prompt to and they give you a response. But now we are entering the era of agent AI. This is AI as an active player in the game, an agent that can analyze, strategize, decide, and act for you in the real world. So let's be super clear about what agent AI means. A chatbot like ChatGPT just sits there and waits for you to ask it something. An agent AI doesn't wait. It's a system that's designed to perceive its environment, like the real-time housing market, learn from new data as it comes in, and then independently decide and act to achieve a goal you set for it. It gives itself tasks. So for example, you could tell it, find me a 3-bedroom house in Charlotte under $250,000 in a school district that's rated an 8 or higher, and that will be cash flow positive as a rental. The agent would then just work 24/7, scanning new listings, analyzing neighborhood data, maybe even flagging potential inspection problems from the photos, and it would only ping you when it found a perfect match, complete with a little summary report. It's proactive, not reactive. Big difference.
And the real-world applications for this are just an absolute game changer. For real estate agents, it's going to automate the 80% of their job that's just tedious, like sifting through leads and doing initial property searches, which frees them up to focus on the 20% that actually needs a human: complex negotiations, building relationships, and creative problem solving. For buyers, it's like having a tireless personal assistant who can schedule virtual tours for you at 3 in the morning and automatically drop offer documents the second you say go. And for investors, well, this is the holy grail. An agent that constantly monitors your whole portfolio, maybe flagging a maintenance issue because a utility bill spiked, or alerting you that you can raise rents in a certain zip code based on new job data. And this isn't science fiction. This stuff is being rolled out right now, and it's going to be mainstream by 2026.
Okay, we've navigated the economic fog, we've found the new opportunity markets, and we've gotten a glimpse of the AI revolution that's coming. So, what does all this mean for you? How do you take all this info and turn it into a real, actionable strategy? Well, that's what this final section is all about. This is your personal playbook for success in 2026. The National Association of Realtors basically boils its entire, really complex forecast down into 5 critical takeaways. These are the new rules of the game. First, expect uneven demand. The recovery is not going to be some rising tide that lifts all boats. It's going to be a series of really powerful currents that are concentrated in those opportunity markets we talked about. Second, go after the newly rate-qualified buyers. That 1% drop in mortgage rates, that is the key that unlocks millions of renters and younger households. You have to understand what they need. Third, pricing is everything. Buyers are going to be laser-focused on that monthly payment. If you overprice your home by even a little bit, you could be dead in the water. Fourth, the mix of inventory is a huge competitive advantage. The markets that have a steady supply of new construction in those crucial mid-range price points, they are going to win. And finally, number 5, migration is still the engine. You have to know where people are moving from and where they're moving to. If you can master these 5 points, you'll be set up to thrive, not just survive, in the 2026 market.
As we wrap up this explainer, I just want to say thank you for joining me on this deep dive. One last time, if this breakdown was valuable to you, don't forget to like, share, and subscribe, and please check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. So here's the bottom line. The real estate world of 2026 is not going to look like the one we've known for the past 5 years. You've got these powerful economic shifts, these undeniable demographic trends, and revolutionary new technologies like Agent AI all coming together at once to redraw the map of American opportunity right before our eyes. The old way of thinking is over. So the question you should be leaving with today is a really simple one. Now that you know where the new lines are being drawn, are you ready to make your move?